We get a market reaction to the DOJ's probe with Bill Stone. He's a chief investment officer at the Glenview Trust Company. So, Bill, we are still tracking, the reactions to the administration's criminal investigation to Powell. Gold hitting record highs. I mean, the futures jumped about more than 2%. Stock market, though, it was relatively muted. And then we've got a USD trading lower. I mean, are investors viewing this as just political theater, or is this a calm before the storm type situation? What are you bracing for?
I think I look at it as continued political theater. While some of the things are new under this president, in the end, there's a long history of some sort of political pressure on the Fed. And it remains to be seen if this was, in fact, that. I mean, we just don't have all the facts yet on what the Department of Justice has. I think what I just go back to is, even when you have different allegations and different politics being played, even, set aside the Fed, in the end, we typically get to the right answer through our legal system. We have a very good rule of law. So I expect it to be sorted. And I suspect most investors probably feel the same way.
Yeah. But what does this mean for the sell America trade right now? I mean, if the independence of the central bank is even seen as compromised?
I think part of it is the beauty of the structure is that we know that there's always been political pressure. There are really only three branches of the U.S. government, and the Fed's not one of them. They're accountable to the U.S. government. But that being said, you have the setup of these governors that their tenures end at different times. So even if you put pressure on one particular one, there's still the ability to essentially push back or still end up getting to a consensus judgment that doesn't necessarily fall under that pressure. So even if the president was able to remove Powell, it doesn't necessarily mean that the policy changes. Yes, maybe he gets one of his more close allies in there. But again, it doesn't necessarily sway the whole thing. So I think that's one place where you can put a little bit of, reason why the markets, while, seemingly certainly didn't like it, don't jump too far to one side.
Yeah. Okay. So the administration's actions are viewed as pressuring the Fed to lower rates to help with affordability. But then the threat of a less independent Fed is kind of pushing long-term yields up. So how are you making sense of all this right now? And whether, you think there could be a possibility for a re-rating of U.S. Treasuries as a safe haven asset?
It's possible. I don't think so. I think part of what gets difficult is, I believe, a lot of the reason why we've seen some of the longer rates here in the U.S. already moving up is really just because our economy has been performing better than, frankly, most anyone expected. Right now, last I checked, the Atlanta Fed was running at an estimate of somewhere around 5% growth for the fourth quarter GDP number. I don't think it'll come through that high, but we really have had a quite resilient economy here.
Yeah. And Bill, what is the likelihood of the investigation affecting near-term rates or the inflation picture? I mean, I know that you're also calling for the Fed to stay on the sidelines at this January meeting.
Yeah, I honestly think the Fed will go about their business and do what they're going to do, which again, actually, if you look at the Fed fund futures, they're clearly not expecting them to make any cuts in January. I think the first chance that you really have a decently close to 50-50 chance of a cut isn't till April, because again, go back to that the U.S. economy has been extremely resilient despite some softness in the labor market.
Yeah. What about some wildcards that we're dealing with right now? And that's the situation in Iran as well as Venezuela regarding oil and, how this is playing into the wider inflation risks in your assessment?
Yeah, and we were, I guess maybe you still say we are getting some benefit from relatively low oil prices, though you've seen oil come up really on those worries. I think you mentioned it earlier around some worries that Iranian production could get hurt. They could somehow end up, if they get into a conflict, close the Strait of Hormuz that moves a lot of the oil. That's a short run risk that could, in fact, happen if we get some disruption. We've been talking for a while about, on the other side, it hasn't been that long, but in terms of Venezuela, that long term, maybe you get more supply. But again, that's a longer term. They're going to have to, put quite a bit of money into upping production there. So that doesn't solve anything for the short run if, in fact, we see this disruption, which, again, nobody really knows. But I think you're getting some of that, I'll say, negative optionality built into the market right now, which is why you've seen some of the Brent crude oil prices coming up a bit.
Yeah, and Bill, if I might just squeeze in one more question on affordability. I mean, we're seeing bank stocks overnight. They were among the biggest losers amid proposals to cap credit card rates. How significant do you think is this move for financial stocks? And where could we possibly see money rotate to?
Yeah, I just think it would take an act of Congress to cap those rates, and I just don't think it's ever going to happen. As I understand it, this is a lot of speaking of politics, is a bit of a political gambit to try and ease up or get to some sort of a deal around some crypto, because the big banks don't want to allow interest to be paid on stablecoin balances, and so this may be a bargaining chip to just take off the table to get to that deal. So I don't expect it'll go anywhere. I know it sold off some of the banks, but that is not something that I'd be too concerned about.
All right, Bill, appreciate your time today. Bill Stone there, Chief Investment Officer at the Glenview Trust Company.